What are you doing? Yeah? You want to say hi? Come here. Come say hi. This is Striker, everyone. He's got a shaved paw because he recently just lost his balls. You're like a Bud Light, gender fluid. This is without a doubt a wild market right now. But while everyone is freaking out about what's happening with AI and all piling into NVIDIA, don't worry, we'll talk about that in just a moment. I think a lot of people are missing what's going on in retail sales. The consumer is hurting, and we're seeing this reflected in earnings calls, and I don't see any headlines about it. I don't see anyone talking about it, and I think it's a huge warning sign of the recession that's developing or already here. Whatever your consensus is, pain is on the way. Now, obviously, I have to start by talking about what just happened with NVIDIA. This was an absolute monstrous move out of this stock. We could see that on the weekly chart. We're hitting, what looks to be near one of the highest RSIs we've ever seen on this stock. You can also see it in this dark candle here on the TTM squeeze that the stock looked like it wanted to start turning over. And if we look over on the day chart, it was doing the same thing. This is usually a strong indication that there's going to be a directional change in the stock. And I think that baited people really hard into this earnings complete FOMO buying due to the fact that this company, within the first 5 minutes of the earnings call said AI 12 times, and people lost their minds because they're so excited about AI. And granted, I've been talking a lot about the best way to make money off AI is off these chip stocks. And I was somewhat bullish on them. I wasn't expecting this company to literally go up by 27% overnight, when it's already such a large company. I mean, that was an absolute crazy move that we just saw out of this stock. Heading into that earnings just this morning, I immediately shorted it on the open. I'm still short on this stock, and I'm looking for 342 just off this, just off of normal pullback back into this. We can see that we had a bunch of consolidation here. That looks like the bottom here. I'm just doing a normal Fibonacci retracement there, looking for that 342. I tried to map out some Elliott waves here. This one's a bit odd right now, so I wanted to see it do a retracement, see if that plays out, and then revisit those Elliott waves. Now, one stock that did play out really well was AMD. And actually, I think I should go ahead and pull up the Discord here. If you're a subscriber in the Discord, you can see that on May 1st, I shared this chart for AMD. And now let's go back and look at where AMD is right now. Pretty much a perfect touch on that third wave I was looking for. I'll be looking for a pullback on AMD. We can also see that it's at a 79 RSI. Looking for a small retracement here on these Elliott waves. This one's been one that I've been able to map out really well. A lot better than NVIDIA. Was not expecting that monstrous rally out of NVIDIA. Luckily, wasn't shorted. I didn't have any meaningful position at all. Unfortunately, nothing to the upside. But I mean, I think if you caught that upside on NVIDIA, you didn't do it with much size. The option contracts didn't have a ton of volume. That was a really unexpected move. I think that's why it became so huge. All the FOMO into that. But I mean, if you're thinking about this stock right now, if we're just trying to build up a bullish case, this stock is trading at insane multiples right now. Okay, this looks like the dot-com bubble, but the AI version at this point, with how overvalued this company is. I don't think that anyone with any credibility whatsoever would tell you that this is a good price to buy. It simply isn't. This is overextended to an extreme. And, that said, if I look at AMD, I'm still placing AMD to go for, higher highs. AMD could maybe even hit 160 this year. And so NVIDIA maybe could pull out some more. Maybe we see that this AI bubble squeezes even more into the end of the year. It's totally possible. I'm not writing it off just yet. Now, the one thing that AI rally did, though, was actually bail me out of some weekly calls that I had, some short-term calls. I've rebalanced my portfolio with long-term puts, so long-term short positions, and then short-term aggressive call positions. So when that happened, I was actually able to unload a lot of SPY calls at a profit. And I've been bearish on retail stocks right now because I'm expecting weakness out of the consumer. And we've actually seen that. We saw that out of Kohl's, out of Lowe's, Home Depot. Now Costco has also missed earnings. And I've been talking about that short position for a while now. If we actually look this in the after hours, boy, did I get baited. you know, where I saw this initial sell-off, I'm like, oh, you know, all that confirmation bias, I'm a genius, yes. And then we see it bought right back up. As the company announced that they think that they can compensate for the weakness in sales by raising their membership prices. And they think they can do that without losing a lot of members. Might be accurate. This is a very strong consumer base from this company. So we saw that the stock rallied up a bit after the earnings call then initiated. We saw it to sell off again. I think that this stock will continue to bleed. I think next earnings won't be much better than this. You know, even if they raise their membership prices, I think the consumer is still going to show weakness. Maybe even we see that there's a bigger loss than we originally anticipated. If you remember, I've already gone over my technical analysis on this. I expect quite the precipitous drop out of the stock. I did buy some lottos into the earnings call. Those will likely probably, maybe if I'm lucky, I'll get break even on those, probably take a small loss. But I did have a large short position going into this. It was up 41%. So I took a lot of those profits heading into this earnings call and then bought those short terms cheap lottos just in case we got a big drop here. I wasn't really expecting a big drop, but I figured if we did have a miss, we've had earnings compression over multiple earnings for this company. It looked like a miss was going to be a high probability. I just wasn't expecting it to have, you know, an instant gap down to like 390, or I'm looking for the low 400s. About where the stock will likely end up by the end of the year is my anticipation. So I went ahead and closed a lot of my long dated June. I closed out of my June contracts completely. I still hold some September contracts. And I don't even think I'm going to have an opportunity to average in. I think these are going to open up right about where they were before. There wasn't a lot of implied volatility built into the price of those contracts. So I'm still leaning on the bearish side of this. This earnings call hasn't changed anything. In fact, it's brought some validation, even though I didn't get the price action that I wanted. They were able to convince investors that they would be able to bring some of those money back. I'm not convinced. You know, with all the weakness that we're seeing with the consumer and with other retail companies, I think there's going to be generally a lot of weakness within the sector. So I'll be looking at probably some other players to come in short on as well. So I'll be mentioning those in the Discord, but that's what's been going on with the Costco play. Overall, this play was still a big win. You know, I took 41% before the earnings call even happened. Took a lot of those profits, locked them in. That risk management is so important. You know, even though I was very bearish headed into this, it's just so important to just say, you know, I got profits, take those off the table just to manage that. That cash is nice to have, especially in what's been a very choppy market right now. And that's majorly because we still have this huge conversation about whether the debt ceiling is going to be raised or not. You know, the Federal Reserve is down to, I think I saw reports today of $50 billion left. It's not a lot of money at all. And we need to have some consensus onto that. On top of that, we're heading into a 3-day weekend. So all these Congress members, you know, and the Biden administration are going to take a nice long vacation. It doesn't seem like they're going to solve anything before that. The market might not like that uncertainty. So tomorrow could be really weak, in fact. But, you know, again, I'm thinking that if we do get some clarification on that deal, we'll have one last FOMO rally for the market. But I'm thinking that if we don't get clarification on that into tomorrow, a lot of these short positions I have set up will probably do really well, and I'll probably go ahead and take some profits on those just in preparation of just constantly building that cash and taking in profits when I get them. I think that's the best way to play this market. This week has been a very good week so far, especially, you know, just last week I did that report on, hey, my performance has been weak. Here's what I've been doing wrong. And we've corrected that for this week. It's been a lot better, a lot stronger, and also seeing some of these fundamentals I've been looking for starting to play out. So that is, you know, that's really great to keep a positive mental of like, okay, I have a good understanding of what's going on in this market environment right now, even though it is pretty chaotic. Now, for the sake of transparency, I do want to talk about a little oof I had. Not a big oof, just a little oof. And that was I did buy some Bitcoin. We've gone over this chart multiple times, looking for a potential 24K. I was then reviewing this. I was looking at the TTM squeeze, how it looks like it wants to roll over. I was lining this up, and I was like, well, we've seen a lot of consolidation around this, you know, 0.618. Now remember, this is likely to be choppy. We had this very direct down second wave. I've talked about this a lot. I don't want to repeat myself too much, but I went ahead and did some buying here, right? I came in on the 1 hour chart and I was looking at this developing. I think I did some buying right here on this rally, and then we see multiple drops down lower since then. Now, luckily, I don't bulk buy all in risk management, right? I do bulk buying over time. So I'm not, like buying an all-time high or something ridiculous, but I probably did get a little impatient here, which is something that I always kind of kick myself for. I don't like to do that. But at the end of the day, we're looking for this fifth wave to the upside. Likely might join the market in this final rally, maybe to the end of the year before we see these big pullbacks, right? So that was the thing. That's what I did. So I'm still doing some buying there. Maybe do my latch purchase below that 25K like I wanted. I wasn't gonna buy at at the exact what is this? This is showing me 23,000. That's about 24K right on the dot is what we're seeing there. I wasn't going to wait for that. I was just going to buy below 25K. Remember, these Elliott waves, these Fibonacci levels, they're not an exact science. It's an art, you get lucky if you're timing it perfectly, but that's never the goal. And I also just want to cover just the overall macro environment of what's going on in this market. If you look at the SPY index, last week we were talking about how we broke 420 and it looked extremely bullish, and then we're looking now more chop and this hanging out in the same range. If we just even go down to the 1 minute chart, we can see today was actually up. It looks a little bullish, even with all the headlines and stuff going on. Looks like Nvidia saved the market. We're back to bullish. But then you look at the Russell 2000 and you see this weakness. And when you see big companies like Costco looking more like small cap stocks, something's not right here. Something doesn't really add up. So if you're a bull, you're looking at this probably like, well, I want to be bullish on the Russell 2000 on my small caps because they're going to catch up to the bigger players. They're going to start to look more like the S&P right here. They're going to start, to play catch up with the big stocks. But if you're bearish, you're looking at this like, okay, the generals are holding up the whole market, but the army has fled. So, can generals win a war without an army behind them? No, they're going to fall, and they're probably going to lead the way to the downside. So that's what you're thinking if you're a bear right now. And especially when you look at these big stocks, Google has showing, some signs of some consolidation. It's still near overbought levels. Nvidia, we've already talked about, at record high overbought levels. I've seen some people say that this AMD rally will carry us all the way to 160 or 180, yet we already see that it's extremely overbought. Not impossible. If we look here, you could get all the way to 86 RSI. That's not much higher than where we're at right now, but maybe it could go a little bit higher. At the end of the day, I wouldn't be chasing any of these with a large amount of money or capital. There's just so much risk. You've missed all your reward. Your reward is gone. And when you look at where this market's likely headed for these big pullbacks later in the year, that's where the buying opportunity is. When that recession is actually in front of everyone and they have to come to terms with it, and they actually start paying attention to all the weakness that we're seeing in the data, all the revisions that we've had in past data that looked good back then, and now they've come back and been like, oh, actually that was pretty awful. Yeah, this will catch up to the market. And so, you can make a few bucks in a bull market, but you can make generational wealth in a recession. And that is what I'm looking for. Give me that bear market. I'm ready for it. And that's going to be it for this weekly report. Remember, there's a bunch of more info in the Discord. Now, I'm also on the wait list to add a subscription feature to my Twitter. And if that does get set up, you can then subscribe to my Twitter, not have to use the Discord. I'll post everything that I post in the Discord to my Twitter. So that content will, 10, 20x. If you follow me on Twitter, I actually just got a shout out for some of the stuff that I've been posting on there, which I appreciate. Shout outs, thank you. It's very rare that if you're a trader, you actually get credit for getting things right. Usually it's just people kicking you when you've made a mistake, but that's very appreciated. But that's just a fraction. What I even talk about on YouTube is a fraction of all the information that we kind of go through on the Discord. And if you can always go in there and ask a question. I try to answer every single thing asked in the Discord, because I know I'm not just helping that person, but also the dozens and dozens and dozens of people that are too scared to ask a question. And that drives me nuts, because there's no such thing as a dumb question. If you're learning, I want to help you do that. That's why I make all this content. So I hope you found this helpful, and I will see you on the next one.